Today is election day in the United States. Voting began this morning with polls showing President Barack Obama and his Republican challenger Mitt Romney were neck and neck. Right now I'm joined on the line by Julia Coronado, Chief Economist for North America at BNP Paribas in New York. So Julia, how do you think the markets are reacting today as a result of the election?
The market's been pretty quiet ahead of the election. Seeing volumes have really gone down in most markets over the last week or so. And I think people are very cautious ahead of the election.
Regardless of the winner, many strategists believe the result will have a positive impact on stocks. How do you see stocks performing after the results are released?
I do think that getting this uncertainty behind us will be positive for risk appetites, and that is something that should benefit stocks at least over time, if not immediately. We have been under a cloud of political uncertainty. We've seen that affect business confidence and business capital spending in particular.
And in terms of market reaction for the euro dollar, how do you see this pair performing after the results?
I think that, under an Obama victory, one thing that we would have clarity on is that we would have continuity of monetary policy. We think there would be fewer uncertainties. We know that Chairman Bernanke's likely successor under an Obama administration would be someone like Vice Chair Janet Yellen, who would very much continue the same kind of aggressive monetary policies. And that should eventually, over time, lead to some downward pressure on the dollar. So I think that, on the other hand, if you had Mitt Romney win, at least there would be some degree of uncertainty about whether those aggressive monetary policies would continue, and you might actually see a stronger dollar as a result.
On Monday, gold recovered from a 9-week low ahead of the election. A Romney victory is perceived as a risk for gold. Do you believe an Obama victory would be more bullish for gold?
With regard to monetary policy, to the degree that an Obama administration would come along with a more dovish Fed, yes, you could argue that investors will continue to like gold in that scenario, whereas a more hawkish fiscal and monetary policy that is presumed, although it's not completely obvious under a Romney administration, would be less supportive of gold. But that said, it's hard to really say what the fiscal landscape looks like. There's a lot of fiscal rhetoric ahead of an election. Often the tone of those discussions changes almost completely in the aftermath of an election. Rarely have we seen politicians thank the voters that put them in office by implementing fiscal tightening. So while Republicans talk about fiscal austerity, the likelihood that they would implement that in a significant way in the near term, I think, is quite low. One interesting dimension to the fiscal discussions will be the hurricanes, which has been a very damaging storm, very costly storm, and in particular has been very damaging to a lot of public infrastructure. We could actually see not only the fiscal cliff get pushed forward after the election, but we could also potentially see a package of federal aid to states or an expansion of the resources available to the emergency support agencies that would actually not only mean less fiscal tightening than people fear, but potentially much less than people are fearing, and maybe even a little bit of stimulus in the near term.
There is a lot of talk about private equity tax. How do you expect an Obama or Romney win will affect the implementation of this reform? A
Romney victory would probably mean more likelihood of the kinds of private equity or capital gains tax breaks, whereas an Obama victory would mean a much lower probability of such things. Also, under consideration would be a foreign profit repatriation tax holiday. So there's going to be a tremendous number of tax issues that are on the table. None of them are really 2013 issues.
And finally, Julia, you believe Barack Obama will be re-elected. Do you think this result will be positive or negative for the future of the U.S. economy?
Right now, the way the polls are tracking, it suggests that we will get an Obama victory and that the Democrats will maintain their Senate majority and gain a few seats in the House although the House will remain with a Republican majority. But nonetheless, if the Democrats make headway and gain seats or maintain their margins in both houses and the presidency, that will be a pretty significant victory. That will give them a narrow mandate that will allow the fiscal cliff negotiations to go smoothly.
Julia, thank you very much for sharing your expertise with us today. Make sure you tune in tomorrow as Thomas Toplin will be looking at how the markets react when the US public choose their new president. Goodbye.